Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
David Gura here in for Joe Matthew, and we continue to process what happened yesterday, that extraordinary reversal that we saw in the markets. The president backing away from what he said was going to be a sustained plan to have a baseline tariff of 10% and a series of reciprocal tariffs on countries around the world. He decided to just go with that 10% baseline, with the exception of China. That tariff now well over 100%. Again, a huge market reversal yesterday. Here's what the president had to say after he decided to make that change.
There's a lot of winning out there. We're having a good day in the stock market, as you can see, an all-time record day, and hopefully it continues. I think it should. Our country's stronger than it's ever been, and somebody had to do that. We had to take the medicine. We had to go through the operation, and that's what we've been through, and a lot of presidents would not have done it. No president would have done it, I think.
So perhaps the president is not going to be super enthused to see that the market reaction is not continuing today, as we saw yesterday, as we contend with these tariffs, knowing full well that A, there is always still uncertainty out there as to whether or not the president could change his mind again, and B, because of that uncertainty, even with the delay, it already could have had or still will have an economic impact. And that is the subject of a piece of analysis that you can find on the Bloomberg terminal and online today, in part written by our colleague Sean Donnan, Bloomberg senior economics writer, who is joining us now here on Balance of Power. So Sean, as we consider that we had already heard from a number of corporations, be it Walmart or Delta, even Amazon reportedly was canceling inventory shipments from China. Even before this delay was announced, already we've seen it affecting behavior and, I would guess, the economy as a result.
Yeah, no, absolutely. And I think that's one of the big takeaways from the last 24 hours. Yes, while the president has scaled back some of his tariffs, we still are landing at this 10% baseline rate, which is going to cause a lot of recalculating related to supply chains for companies. But then you have this much bigger, really a prohibitive tariff of 145% now on imports from China. And what we're hearing over and over again from people in the supply chain business, from people who monitor the data, from actual companies who have orders, waiting or literally at the kind of loading dock in China to ship to the United States, is that they're all hitting the pause button. And that is going to hit the U.S. economy. It's going to hit the global economy. People, some of the companies that we've been talking to have a few months worth of inventory that they can work through. But after that, it's, huge question marks about what comes next. And that's this kind of uncertainty effect that economists have been talking about for weeks. When it comes to tariffs and the economy, how do you build a factory in this climate? How do you hire people in this climate? Everyone's kind of hitting the pause button, and that's never good for the economy.
Sean, we've heard the president lean into two metaphors. One is medical. He talked about the patient and the medicine that he's administered. The other is sartorial, talking about the kind of tariffs he aims to put in place. And he said they're not off the rack. They're going to be bespoke. They're going to be tailored. And I'd love to get your sense of what these next 90 days look like, what the White House has telegraphed about how they're going to embark on all of these negotiations with all of these 70-plus nations, trading partners in the months ahead. Any clarity on what that's going to be like? And I think we all know that when it comes to these trade agreements in the past, these have been years-long endeavors in the making.
Look, let's just build on those metaphors. I think what the president announced yesterday is that the operation is going to take another 90 days. And what other people are saying is there's going to be some side effects to the medicine, and they may not be pretty. And then, if we're talking about the suit, well, he's, the off-the-rack suit is that 10% baseline tariff. Everyone gets that off-the-rack suit, and we're not moving into a world of tailor suits. We're moving into a world where, they're going to be shortening the sleeve a little bit here and there to kind of fit the client. This is going to take time. A lot of these negotiations in the kind of pre-Trump world took months and years to carry out. They're incredibly complicated. In fact, that's why a lot of times trade negotiations don't get concluded. It's just really hard stuff to do. The whole idea that you can solve all of the tariff barriers facing U.S. exports in the world in the next 90 days, um, and get countries to agree to swallow a 10% baseline tariff, which is what the president seems to be doing. And we've heard from other parts of the administration that, getting below that 10% is only going to happen if you come with a kind of almost a miraculous deal from the other side. And then we also have these sectoral tariffs that other countries are going to want to see taken off. If you're Japan, if you're South Korea, if you're the European Union, these 25% auto tariffs are as meaningful as the 10% baseline tariff, and perhaps more so.
Yeah. Well, and there's steel and aluminum to consider. The president's still promising tariffs on pharmaceuticals, for example, possibly lumber, semiconductors. There is no sign that this is over yet, obviously, Sean. And to the point David was asking about the countries that do want to negotiate, I wonder about the countries that might not, specifically China. As the president argued yesterday, he thinks China wants to make a deal. But Sean, have we really seen any indication of that from Beijing?
No, look, I think the indication we're seeing from Beijing, at least publicly, is exactly the opposite of that. They are, battening down the hatches. They were meeting in Beijing today. We reported out of Asia earlier to kind of talk about stimulus measures to kind of shore up the domestic economy to weather the tariff storm. I think there's a view in China that you hear from analysts is that the leadership in Beijing has decided that they can, plow ahead without the United States in that economic relationship if they need to. In fact, if you think back to the first Trump term and the Biden term and all the export controls that were put in place there that were meant to kind of limit China's access to semiconductors and other important products, they've been taking a kind of, if you're looking at it from Beijing's perspective, they've been seeing kind of hostility coming out of Washington for a while. This is obviously a huge escalation, but is it the type of thing that's going to cause you to enter a conversation? Do you think that these tariffs are going to go away? What is it that you can give to the United States to make Donald Trump happy? Donald Trump wants to eliminate the trade deficit with China. That's going to be pretty hard to do. And, meanwhile, caught in between these two economic giants are the companies that do business there and the consumers that buy those products. That smartphone is not getting any cheaper today.
Sean, we got about a minute left, and I'm looking here at the NASDAQ down about 6%, the S&P 500 down about 5%. Have we decoupled from China? This was something that the past administration pushed back on a lot. They said that wasn't their objective, to decouple from China. Are we effectively there with the tariffs where they are today?
So look, I think that the view of a lot of experts is that Donald Trump has never been someone who wants to decouple to China. He simply wants to sell more to China. But with these tariffs, they're becoming so prohibitive that we are certainly a lot closer to that decoupling cliff edge, as we put in the headline in the story that we ran out yesterday on this subject, than we were a year ago when Janet Yellen was in Beijing and saying America does not want to decouple. The cost of that would be too great.
Sean Donnan, thank you very much for the time. That's Sean Donnan, Bloomberg senior economics reporter, senior economics writer, and as Kayleigh said, a piece that I think both of us commend to you to read with him and Enda Curran writing it. This is Balance of Power on Bloomberg Radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Terry Haynes now, the founder of Pangea Policy, and I suspect that he was shaking his head as I was asking Mike Regan for sort of a sense of the rational response that we might see in markets to what the president is doing here. Terry, we talk a lot about sequencing in the context of the president's legislative and economic agenda. Let me ask you about sequencing in another context. That is, how this White House, how this administration goes through what they say is a long call log, a long list of countries and trading partners eager to meet with this administration to hammer out deals. They want to send a sign to the markets, to Americans, that in fact they're making progress. Who needs to be at the top of that list? Who should they be prioritizing as they go through the sequencing of these trade deals?
Thanks for having me. I think they should sequence in a couple of different ways. One, They should probably look at the United Kingdom, in Europe, but not of it, so to speak. I'd also look at major unaligneds, particularly India. India is hugely important, and working out some deal with Modi would be a great signal. Let's remember just 2 months ago in Washington, Modi came here and talked about MAGA plus MEGA, make India great again, equals mega. So maybe Trump should figure that out. And finally, somebody in the Asia Pacific, either Japan or Australia, would be very good. I think those three would send large signals about the seriousness and kind of the direction of travel of the administration.
Well, as we talk about the seriousness of the administration, Terry, and it's great to have you back here on Bloomberg TV and radio, I wonder if you see any kind of credibility dent that the administration is now going to have to contend with as it conducts itself in these negotiations, considering, once again, we have seen an extreme change in tariff policy and a flipping and flopping of the narrative. Does that actually give these other countries who are coming to the table a little bit more leverage? Is there a bluff to be called at some point?
Oh, sure. There's credibility gaps all over the place. There's a credibility gap on the part of the administration to some extent. There's an awful lot of allies and friends of the United States that feel whipsawed and feel bruised in a lot of different ways, and this pause does a lot of things. But one of the things it does is gives Trump an opportunity to right-size those relationships and frankly reassure people. One other thing that we should all be aware of too was that Lutnick's people at Commerce were out to a number of major countries, and I assume others as well. I know of a few that giving people a laundry list of what they wanted to talk about, both in terms of tariffs and other sorts of trade barriers, before the tariffs even went into effect. So, I will give the Trump people good marks for being able to talk to allies and friends and others before all this started. So hopefully that can help push things. Thirdly, I would point out as well, I thought Mike McKee gave a very good summary of all of this a few minutes ago on your air. One thing I would add to that, though, is that countries may well be able to come to deals by making future promises. The United States itself does this by saying, we're going to reach a deal to do X, Y, Z on trade, and as part of that, we promise within a certain period of time we're going to pass legislation, we're going to change rules, whatever. Those countries will do similar things, I think, in order to make deals.
It must be grading season. We have here Terry Haynes giving his marks to the White House. Ira Jersey, our chief rate strategist for the U.S., giving his marks to the auctions that we've seen over the last couple of days, giving the 10-year auction an A+ and a 30-year auction an A, saying that they were really solid. Makes me ask you, Terry, sort of how you look at this administration's visibility into the markets and their response. You wrote earlier in a note that perhaps the White House, we've misjudged how much this president cares about market moves. And I think yesterday we saw perhaps an indication that it's still something that the president cares quite passionately about, that he could see those startling moves in the bond market, for instance, and feel like he has to do something that things aren't going to course. Do you care to revise the statement that you made earlier? Have things changed this week vis-a-vis our sense of the way that the president looks at the markets?
No, I won't revise. I will extend my remarks, though.
Fair enough. You may.
On Capitol Hill. I will extend my remarks in this way. When markets say, geez, Trump cares about the markets, I mean, to me, that's a illusion and a rationalization extraordinaire, because they don't really mean Trump pays attention to the markets. What they mean is we, the markets, are actually the masters of the universe, and Trump will do as we wish. Well, I've been telling markets for a couple of months on tariffs, that's not going to be the case. The reason why it's not going to be the case is because the goals here are geopolitical. This is not set 2017. The reason why it's not is because economic policy is roped and yoked to geopolitical goals across the board. And, you can even see that with tariffs, where some of the tariffs exist for geopolitical reasons. So, presidents don't think about the markets all the time. The markets are not the only thing that needs to be dealt with. And, so what I would say to folks is that, you've shown, or as Trump has shown, that he's certainly interested in where the markets are on these things, but he's not paying sole attention, and he's not gonna dance to markets' tunes. Number one. Number two, I think the other thing we need to remember here too is anybody on Wall Street that's self-congratulating today shouldn't. Because one of the reasons why these tariffs happened is essentially that Wall Street let them happen. In Washington, silence equals assent. If you're silent, that means go ahead. And they didn't really raise any objections to what was about to happen until well after it happened.
Well, it's a very fair point. Certainly, we're seeing, it seems, some protest happening now, looking at the red on my screen, Terry. Also on my screen, I would point out we are still paying attention to the cabinet meeting at the White House, which is ongoing. The president has gotten reports from almost every cabinet secretary at this point. The Secretary of the Interior, Doug Burgum, is speaking now. As you can see, if you're with us on Bloomberg TV or on YouTube, we still have Secretary of State Marco Rubio to hear from, and then the president may well start taking questions from reporters. We'll dip back in for those if indeed that happens. In the meantime, though, Terry, as you speak to this idea that the president isn't exclusively focused on the markets, what have you learned this week about the influence others in his administration may have in interpreting the market action and then shaping presidential policy by extension, as we understand that Scott Bessent and Howard Lutnick presented a kind of united front to the president yesterday, which helped lead to this change in tariff policy? Is this actually a sign that Wall Street's initial expectations of Scott Bessent being kind of a steadying hand, if you will, when he was tapped for this position, may indeed be serving in that role?
Markets still have a policy concern, of course, and in large part because this is a pause. It's not a volte-face or a throwing away of the policy. And Trump still has a lot of urgency around this. So markets are right to continue to be concerned. Where I think the White House has improved here is, though, in communication message, something that's important. And we've been talking for 6 months now about a so-called team of rivals that are headed up by Bessent and Lutnick. And I think what you saw yesterday here is Bessent put pretty much in charge of the messaging to Wall Street, while Lutnick is supposed to be responsible for the shepherding forward of negotiations and potential deals. Bessent has a foot in two camps right now. Bessent is trying very hard to push the tax cuts bill, and they'll try to push a bill and get it done, frankly, I think within this 90-day period. They have a pretty good chance of being successful at that. But at the same time, Bessent's going to continue to be the soothsayer for Wall Street, and that seems like the right conclusion for the Trump people to reach, since Bessent tends to stoke some confidence where I think Secretary Lutnick, for rightly or wrongly, doesn't.
Terry, you've mentioned a number of names there, and one that didn't come up is Jamieson Greer, Ambassador Jamieson Greer, the U.S. Trade Representative. And there was that photograph that we saw from the House hearing yesterday where the Truth Social post went out, and an aide had to lean over toward the U.S. Trade Representative and show him what the president had done. Where does he fit into this pantheon of economic advisors, and what does that tell you? Is it at all worrying that the man who has been charged here with trade policy wasn't in the Oval Office yesterday as Howard Lutnick and Scott Bessent and President Trump sat down and pounded out that poetic, important post on Truth Social?
Well, the USTR is typically given cabinet rank, not always by every president, but typically given cabinet rank. But at the end, not only does he get his power from the president, but he's essentially a staffer of the president. I mean, they all are, but they're not cabinet secretaries or anything else. And the USTR in this case, I think, is treated a little bit more as a staffer than as a peer of Secretaries Bessent or Lutnick. I also think, in Greer's defense, he's pretty new to this. Just got confirmed very recently, and probably not quite as up to speed on it as everybody else. But I think the net of what you point out clearly is that the three people who are in charge of all this are the president as the decision maker, Bessent as the person who has his eyes most clearly on the markets broadly, and Lutnick is the person who's supposed to go out and execute these deals.
Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.